Okay, so this is more advanced. It's not for newbies. So if you are new, please patience with you. Um, the topic is this power of three, market makers, buy or sell model, SMTs, and standard deviations. All these concepts or components, it's only one in one single model. You can find all these elements in one market maker buys or sell model. You can find one multiples, power of threes in developments, um, standard deviations in every stage for the market maker buy or sell model, and in every phase for the change in the power of three, change for accumulation to manipulation. You can find one SMT for confirmation this change. Okay, in one change for manipulations to distribution, you can find one SMT for this change in this confirmation, and every this change in the state of delivery, it's in one specific standard deviation. So the standard deviation is not only for measure your targets. This is for anticipate every phase for one power of three or every stage in the market maker buy or sell model. Okay, so power of three, first accumulation, market maker buy or sell model. The first, it's smart money reversal, low risk buy sell, accumulation or distribution in various conditions. Here, standard deviation. The first standard deviation here, it's this 0 and 1. The next standard deviation you can find in the 0 and half. This is for low risk buy or low risk sell. So the 0 and 1, it's correlation with the smart money reversal here. The low risk buy or low risk sell, it's in the 0 and half deviation here. Accumulation and distribution or the silver bullet zone, it's in the 1 and 1.5 deviation. Okay, but in the 1 and 1.5 deviation, you can find other level in different case. You can find two accumulation or redistributions levels here. So you can find in 1 and 1.5 deviation or other reaccumulation. You can find the accumulation and other level for reaccumulation or redistribution. And in the 2 and 2.5 deviation here, it's for the smart money reversal here. But in the same time, in this 2 and 2.5 deviation, you can find other level for reaccumulation or redistribution for moving to the 3.5 and 4 deviation. 3.5 and 4 deviations, it's for the smart money reversal or the turtle soup here. In the power of three, the three elements, accumulation, manipulation, and distribution. So in all these change here, in the accumulation, change for manipulation, here you can find one SMT here. In the change to manipulation to distribution, you can find here one SMT here. In the smart money reversal, it's the same dynamic. Here you can find one SMT. One in the beginning for the smart money reversal, you can find one SMT, and this is your confirmation for the smart money reversal because it's the more higher or the more lower in this range, in this beginning for this price move or this market maker buy model or in this market maker sell model. So when you find one SMT here in one high time frame PDRA, smart money reversal is printed. In this moment, you can find one SMT. Okay, so this is your confirmation. So when this smart money reversal is printed, the first displacement or the first projections range, it's printed. So in the smart money reversal, it's in the 0 and 1 standard deviation. So in this moment, you have one measurable range for the next market maker buy or sell model. So the next stage in the market maker buy or sell model is the low risk buy or the low risk sell. So this is in the 0.5 deviation, this low risk buy or sell. So in this change, when this low risk buy or sell, it's the beginning. Before this beginning, you can find other SMT here. End for the smart money reversal and the beginning for the low risk buy or low risk sell. The next stage is other accumulation or distribution stage. And in this moment, again, you can find one SMT. This SMT is your confirmation in every change for every stage for this market maker buy model or sell model. Or it's your confirmations for one change in the accumulations to manipulations or manipulations to distributions in one power of 3, in the present power of 3 in development. The next, reaccumulation and redistribution, the same dynamics here. You can find one SMT in the end and the beginning for this new stage. So in every stage for the market maker buy or sell model, it's in one specific standard deviation. In here, it's the smart money reversal in this area, in the 1 and 0. Here, in this area, in the 0.5, you can find the low risk buy or low risk sell. Okay, in this mid, in the 0 and the 1 deviation in the mid, 0.5 deviation, you can find the low risk buy or low risk sell. In the 1 and 1.5 deviation here, you can find the accumulation or distribution level. This is the silver bullet zone, because in this point you have all this information. You have already the smart money reversal, you already have the low risk buy, low risk sell. So this information is helpful for trust in the next price move. So in the 1 and 1.5 deviations, because it's in the mid for all this range in this market maker buy or sell model, all market maker buy or sell model, it's in these deviations. So the 1 and 1.5 deviations, it's in the midpoint. Okay, so this is more easy trust in this level or standard deviation, because you have the information. So it's more discernible range for take one range opportunity to the 1 and 1.5 deviations, move to the 2 or 2.5 deviation here. If price have unfinished business, one liquidity pool or one PDRA or fair value gap in the 4 deviations or high time frame PDRA, you can take all this range to the 3.5 or 4 deviations. But in the silver bullet zone, the more easy targets is the 2 and 2.5 deviations, because in 2 and 2.5 deviations, typically you can find one retracement or one reversal. Remember, 2 and 2.5 deviation here, it's for one reaccumulation or redistribution. If price have unfinished business, to the 3.5 and 4 deviations, you can find in these 2 and 2.5 deviations one reaccumulation or redistribution level. But in other case, in the 2 and 2.5 deviations, it's the beginning for other market maker buy or sell model. If you are in one market maker sell model here, in the bearish move, in the 2 and 2.5 deviations, if price have one PDRA here, price is bullish, you can find here the beginning for the smart money reversal for the market maker buy model here in the 2 and 2.5 deviations. Smart money reversal, it's in the 2 and 2.5 deviations or in the 3.5 and 4 deviation. This all depends for your higher time frame premise, your higher time frame levels, your higher time frame power of 3 in development, 2 and 2.5 deviations here, reaccumulation, redistribution, or smart money reversal here. In the 3.5 and 4 deviations, typically it's one smart money reversal. It's the maximum expansion. So in this area, you can find the end and the beginning for the next market maker. Sell model, change to the market maker buy model. This is the weekly candle here. So in the first day, price moving and printed this week high, and on the Thursday close below the weekly open here. So when price close below the weekly open, it's the moment for think about the body the candle here in development. So the range opportunity it's open because the weekly distributions it's no delivered or it's no printed. So when price close below the weekly open, the next candle Friday, it's your confirmations for these weekly distributions. If you can see the Twitter post, I say the range opportunity for Friday it's open, moving to the daily equal lows. Okay, so with this premise, let's go to the lower time frames. Okay, so in this area, in the beginning for this opening, you can find one SMT in the lows for this confirmation, this smart money reversal. This is the beginning for one market maker buy model. Because if you are bearish, you need first one bullish move for the manipulation phase. Remember, in 1 power of 3, it's accumulation, manipulation, and distribution. So if you are bearish, and remember the daily premise, I will expect the daily equal lows. So if you are bearish, your first information is the accumulation, and you need the manipulation. And the manipulations, it's in the opposite direction. So if you are bearish, your first move, it's in bullish move. Okay, so in the accumulation for manipulation move, you can find one SMT in the beginning. SMT, it's the beginning. This is the beginning for one smart money reversal. This is a push. The other market candles, it's the same. Don't worry. When you change the source for the price here, lows or highs, it's the same because you will expect here one bullish move for manipulation. You can see the lows. When you are looking for one bullish moves, your focus SMTs is in the lows. When you are bearish, looking for bearish move, your focus is in SMT in the highs. So this is your first confirmation here. This is a smart money reversal here. Turtle soup or smart money reversal at the same time. 2 a.m. opening and moving. So in the 0 and 0.5 deviation here, you can find the low risk buy or low risk sell. So the first low risk buy or low risk sell, it's here. It's the one little retracement and continue to this market maker buy model. And in this same area, you can find others in the entries between 0 and 0.5. In this area, you can find the first accumulations or distributions or the low risk buy or low risk sell here. This is the low risk buy here. Exactly in this point, the 0.5, you can find other level here. You can take in every reaccumulation, okay, you can find one fair value gap, OTE, internal liquidity, or buy stops or sell stops. If you don't have one fair value gap, one order block, or one OTE in these levels, it's probability price taken the buy stops or sell stops, the more recent buy stops or sell stops, and the same time taken these buy stops or sell stops. This is one SMT with the other markets, because when you have the reaccumulation or distributions levels, you can find different SMTs in these levels for accumulation and redistribution. So if you don't have fair value gap, order block, or one OTE in these areas, its probability price is looking for the sell stops and at the same time printed this SMT with the other markets, and the other markets taken one or rebalance one fair value gap or order block or OTE. So in these areas 0.5, you can find here one fair value gap. This is other accumulation level, and the same area for the low risk buy or low risk sell. At the same time here, other level, one order block here in the same levels. So if price remains in these levels, you have multiples accumulations or distributions levels for continue to the 2 and 2.5 deviations, because 2 and 2.5 deviations it's the target here in this price move. So its probability here in these reaccumulations, you can find other SMT in the with the other correlations markets. For example, here, look, in this low in SPUS and this low in Nasdaq here, Nasdaq taking this low in this level, in this accumulation level. So for take this tool, for take this SMT with your tool, it's important take one premise, higher time frame premise, and power of 3 in development. It's not only SMT, because you can find SMT in every price move, but when you have the higher time frame premise, this SMT it's very helpful for anticipate every accumulation or distributions levels in the market maker buy model or in the market maker sell model. The SMTs it's not only for highs or lows. SMTs have dipping, have different ways for identify these SMTs. The SMTs you can find in the PD arrays. For example, here in this silver bullet zone or accumulation level. Look, for example, here. This fair value gap here. For example, here. This fair value gap on Nasdaq, it's no rebalance here. It's open here in the reaccumulation level, in the specific level, 1 and 1.5 deviation. What happened with the SPUS? Look, it's the same PD array here. For example, this order block in SPUS or this little fair value gap here. Look, this little SMT here. It's not only for highs or lows. So remember the beginning for this presentation. In every change for accumulation or redistribution, you can find one SMT. It's the beginning for the next price move. It's your confirmation. Specific here. It's the same O for this PD array. So it's important it's the same O for looking this SMT. So this is the confirmations for continuations with the 2 and 2.5 deviations here. What element in the market maker buy or sell model find in the 2 and 2.5 deviation? Okay, for standard deviation, it's retracement and reversal. For the market maker buy or sell model, you can find the smart money reversal. It's the same, retracement, reversal, 2 and 2.5 deviations, and in the words for the market maker buy or sell model, it's a smart money reversal. But it's the same, the area or the level or the standard deviation, it's the same for the smart money reversal. Retracement reversal, smart money reversal. So only think about these words. Okay, so the confirmation here is one SMT in the smart money reversal. You need the SMT for trust in this smart money reversal. And remember, when you have this SMT, one market printed the turtle soup and other market don't printed this turtle soup, and it's the beginning for the next market maker sell model or the market maker buy model. So in this moment, You can see the SMT with the spools in the smart money reversal in a specific level, and it's not only the standard deviation. At the same time, it's in the weekly open. These lines here, these lines, it's the weekly open and the monthly open. Look, the same O, one SMT, smart money reversal, confirmation. So in 2 and 2.5 deviation, the time level, look, time levels here. The timing, remember, time and price, but time it's not only for macros, kill zones. No. The time it's more deeping. Time levels. It's it's not only price levels or time windows. In these markets, you have time levels. Time levels. For example, here, weekly open, monthly open. These two levels, it's time levels. It's no price levels. It's time levels. So in this moment when price it's in the 2 and 2.5 deviations, and you have the smart money reversal and one SMT for confirmation, and the same time you have time levels. So in this moment you have time and price in this point here. In this point you have time, monthly open, weekly open, and price. These 2 and 2.5 deviation SMT, smart money reversal. It's not only kill zones. It's not only for the it's more deeping time. Okay, this is 3 minutes, but you can see these dynamics in all time frames. I use this because it's the more recent price action in the Friday, and this price action it's anticipate, so it's no hindsight. So for this reason, I use this example in 3 minutes because I work with these price moves or price dynamics. Okay, so when you have the smart money reversal confirmation with SMT in the standard deviation, specific standard deviation, time levels here, the next market maker sell model is the moment for change the market maker buy model in the accumulation, change for the market maker sell model. The important thing here is where is the opening or the present opening in function for the previous range. So the previous range here in the 6 a.m. it's the 2 a.m. range. So when the new power of 3 is open here, you working with the previous range. So you will expect the next price moves in function for the previous range. The previous range is 2 a.m. So if you've put attention in this 6 a.m. opening, this price opening 1.5 deviation. So what you will expect in the 1.5 deviation? Exactly, move to the 2 and 2.5 deviation. Correct. Continue to the 2 and 2.5 deviation. So in this price, when price open in these levels in the 1 and 1.5 deviations, you don't will expect one big manipulations for this candle. No, you will expect immediately continuations to the 2 and 2.5 deviations. So if you are bearish in higher time frame, in this point, for example, what do you see in this opening? If you are working with my discoveries, what do you see in this 6 a.m. opening? Exactly, this is the devil's mark. And what is the devil's mark, Dexter? Okay, the devil's mark it's one power of 3 in development and don't have a wick. So If you put attention in the candles, the majority candle have wicks in the highs and the lows. So when price open and don't have wick and only have immediately expansions, this is high probability for one reversal when price reaches the one PD array or one specific level, and in this moment price reversal for printed this wick. So this is devil's mark because when price open, look, this big candle immediately bullish moves. So this is confused for all traders because if you see visuality, it's bullish, it's highly strong in this move, but don't have wick. This is one mark, devil's mark in this point. Don't have wick in the 6 a.m. So when price reached the 2 and 2.5 deviation here, price printed the smart money reversal, SMT confirmations, and price it's high probability for one reversal for printed this week low. This is the last bullish candles moving to the 2 and 2.5 deviations here. Smart money reversal, it's in the 1 and 0 here. And when price confirmation this projection range, the next you can find the low risk buy or low risk sell in the mid for the 0 and 0.5. So in this area you can find the first little retracement for the low risk buy or low risk sell here. So in this point you can take difference. For example, here I take these highs, or you can take this CB or fair value gap here, specific CB here. It's the first displacement in bearish move after the smart money reversal. Smart money reversal printed, and the first displacement, the first imbalance here is this CB. You can take this CB or this 4 bullish candles. It's your order block here. It's the same, but I take the first displacement. The next displacement here, you can find other level here. This little fair value gap here. Look, this low risk sell in this area into 0 and 0.5. So look here, the displacement below the 6 a.m. with velocity, devil's mark here, devil's mark present here, velocity below the opening. Okay, the next levels for redistribution or reaccumulations levels, it's in the 1 and 1.5 deviation here. For example, here it's important taking consideration this. In this little retracement here, in the 1.5 deviation, it's the next reaccumulation level here. This retracement, you don't find one internal liquidity in this time frame in 3 minutes in this area, in this specific area here. But if you looking in lower time frames, it's probability you can find one internal liquidity, but in the same area. This is important thing, in the same area. It's no ambiguous. It's the same area, but it's in lower time frames. In this area, look, you can find this fair value gap here in the same area. It's important thing here taking consideration because it's in the 1.5 deviations and it's no moment for one retracement because it's in the mid for this bearish move or expansion move. The retracement, it's in the 2 and 2.5 deviations here. Okay, so the first move here, it's for continuation to the 1.5 moving to the 2 and 2.5 deviation. It's no moment for retracement, but when price reached the 2 and 2.5 deviations, it's the moment for what? Is question. In the 2 and 2.5 deviations, you can find 2 different elements. Okay. two and a half deviations, it's for the smart money reversal or one reaccumulation or redistribution level for continue to the 3.5 and 4 deviations. This is only when you have the high time frame premise. In this case, you are bearish, so you don't will expect in this 2 and 2.5 deviation one smart money reversal for continuing bullish move. It's no sense because your high time frame premise is in the daily candle, daily power of 3, looking for bearish move to the daily equal lows. So this is your premise, higher time frame. So in this moment, 2 and 2.5 deviations, in this case, it's no for smart money reversal here. In this point, yes, because you are bearish in higher time frame. So for this reason, it's very important have the higher time frame premise, because if you only work with the standard deviations, you lose in these markets. So it's important take this higher time frame premise. So 2.5 deviation here, it's for one reaccumulation or redistribution level. So remember, if you don't have one internal liquidity in this time frame, in this reaccumulation or redistribution levels, if you don't have one fair value gap, order block, or OTE, what do you find in one reaccumulation or redistribution level? Buy stops, buy side liquidity or sell side liquidity, exactly. So, at the same time, when you have this buy side liquidity or sell side liquidity in other correlation market, what do you see or what do you find with the correlation market? SMT, exactly. So, in the other market, let's go SPUS. Where is SPUS? Okay, so if you are bearish in the market maker sell model, I take the highs. SPUS don't take in this high, only printed equal highs here in this volume imbalance here, equal highs. So this is your reaccumulation level here, or turtle soup for continue do the two, do the 3.5 and 4 deviations here in this area.